It's 1:30 p.m. in Lagos, same time in London, and we're bringing you market insights and analysis on Business Incorporated live on Channels Television. Here's what's coming up on the program. New International Energy Agency reports estimates about $2.8 trillion to be invested in energy in 2023. In Ghana, restructures $4 billion in latest domestic debt exchange. And Egypt plans to drill 35 gas wells by 2025. Welcome to the program. I'm Will Ibong. Let's head to the markets now. We're kicking off with major equities in Africa, where at intraday it was very positive sentiments. We see the Nigeria's NGX up marginally though, 0.01%, 66,499 points. It hit a new high yesterday, 15-year high since 2008, and we've seen that number sustained at intraday today very well for the NGX. Now, you see, on the flip side, South Africa, we see South Africa down at intraday, also up at intraday, 0.29%, and in Egypt, the EGX 30, now we see EGX now up more than 1%, more than 1%, 18,818 points, while Kenya closed Tuesday's session in the red. Now we'll move over to, want to see how trading was at intraday. We're going to be talking to Abdulrasheed Momo, is equity trader at TLW Stockbrokers, and he's going to be giving us what's going down at the NGX, what's driving stocks, and what's pumping the NGX, keeping it at that high now. Good afternoon, Abdulrasheed. It's good to have you on the show.
Good afternoon, Chana. How are you?
I'm very well, thank you. Abdulrasheed, we hit this high yesterday, phenomenal. Yesterday, the NGX described it as a frenzy on the NGX. How do you feel right now, Abdulrasheed? We've surpassed your expectations. What do you say?
Yeah, I feel very elated. I've been waiting for this figure to hit all time. This, as you said, it's this 15-year high of all time from 2008 till date. If you notice, for the period of June, July, these levels have been trading close about the all-time high of 66,371. But the bears, we've seen a lot of selling pressure within that period. So as of yesterday, the market actually broke that level, and I feel this is the beginning of new highs for the market. But when we start looking at, we look at in TLW, we look at market based on technicals. We have our algos we use to predict the market. As it is now, as it's a new high, we need to see how valid this bull rally is. That's why you're seeing today, during intraday, the market went as high as 66,649. But as it is now, we are trading about 66,500, a change of about 0.03%. So as it is now, the market is still trying to balance how solid this resistance level is. What I want to say that if the market is able to sustain this resistance, which will now be a new support level, and the market breaks out, then we know that we now have We've cleared the all-time 15-year high, and we are now into new highs. But if the market doesn't, then we might just fall back into that resistance levels again. Because for today, we've seen a lot of volume has been traded today in terms of, we're looking at stocks like Transcorp, Dan Sugar. We've seen them trade extreme lows and highs and form of recovery. So all these stocks within this period are still trying to see how they are going to sustain. If you look at Transcorp current price now, to speak, this same price actually coincides with, I think the period Transcorp was about 7 naira then. I think that would be, I don't have the data, but at the time, Transcorp was about around 7 naira plus. It stood there for a long time before it actually crashed down to about 4. So 7 naira within what is trading now will be the next line. If the bulls are able to hold these levels, they will now see a new leg up for Transcorp. But for me, it's not over yet.
It's not over yet, Abdurrashid. What do you see for banking stocks? Because the performance yesterday was attributed in part to a surge in banking stocks. Investors are strategically positioning themselves in that sector. What do you see for the banking stocks today? What stocks are moving in the market, and do you see them closing in the green or in the red?
Funny enough, the banking stocks have not really done well for now in terms of, I'm seeing a lot of reds in the banking sector, but one key thing I tell investors, always watch out for volume. And the two areas we've seen volume for today in the banking sector, actually, I'm looking at Fidelity and Access Bank. I think, for now, I think Fidelity, Access Corp is they've traded about 16 million. Fidelity has traded about 15 million units, and I think Jitco has traded about 9, that's not good enough. But I mean, anytime you start seeing volume in these areas and prices are consolidating, I think those are areas to watch in the banking sector.
But Rashid, one thing just keeps coming to mind is the NGX going against the economy. The GDP growth was 2.51%, but the NGX is flying high as if nothing is touching it. It's like, the untouchable right now. Is it not reacting or responding to macroeconomic factors?
Okay, let me try and break it down. Let me break it down in a way everybody might want to know. Example is that, is everything not going up in Nigeria? Everything is going up in Nigeria in terms of inflation. You go to the market today, what you bought yesterday, the price is higher than what it is today. So look at the market, the general stock market, as when you go to the market to buy things, everything has gone up. So I see no reason why, if you compare these stocks now, if you compare most of our equity prices with dollar in terms of the exchange rate, you know that they are virtually cheap. So let's look at it from that angle. The stocks are cheap in terms of, dollar is going for about 900 now compared to what we are seeing now. So automatically, the market seems to be moving as prices are moving up. Then again, I always tell people one thing, no matter how bad an economy is, people will always look for areas where they can make money. As bad as things are in Nigeria in terms of the price of fuel has gone up, people cannot afford that. A lot of people are complaining, but some people have found the market as a buffer for them to make money. It's like a class thing. You need to carve a niche for yourself and say, this is where money is going to. And that's where we are seeing a lot of people moving in the stock market. And again, take note that the stock market, again, this period, these are not borrowed funds. These are not borrowed funds. This is real money. These are not margin facilities. Because if they were margin facilities and there was any issue to the market, you would have seen the banks actually selling off.
Okay.
So this is real money playing in the market this time around.
Okay, Abdurashid, we'd have to leave it there. I know you do have a lot to say, but we're running out of time now. But thank you so much for those insights, Abdurashid Momo, equity trader, TRW stockbrokers, for sharing this with us.
Thank you very much. Cheers.
Now let's head over to the Middle East, where markets were mostly negative at intraday. We saw Abu Dhabi index down 0.18%. Dubai, however, was also down 0.43%. Now we see elsewhere, Saudi up 1.1% and Qatar down 0.2%. Now, to the EU, where things are shaking up there, we see China and US, as China is defending its business practices as a visit from the US Commerce Secretary comes to a close. The visit was meant to strengthen US-China communications, but the visit may have shown a harsh light on trade between the world's two largest economies. For more, we're joined by Deutsche Welle's Cassandra Sant. Cassandra, the US Commerce Secretary called China uninvestable. What does she mean by that?
Hi, Will. Thanks for having me. That's right. Harsh words for the world's second largest economy. But Secretary Gina Raimondo was specifically saying that American firms have told her that China has become uninvestable for them. Raimondo pointed to exorbitant fines that come without explanation, surprise raids, and revisions to the counter-espionage law in China, which she said is sending shockwaves through the U.S. community there. She claims that these and other actions have made it risky to do business in China. That's for many sectors, from e-commerce to education. She added that she's pressing China to take action to improve business conditions. The secretary gave the example of the Chinese actions against chip maker Micron Technology, whose products were restricted by Beijing this year. She said that there was, quote, no rationale given for the actions and rejected comparisons to U.S. export controls. And it's not just Raimondo. The American Chamber of Commerce, for the first time in its 25-year history, no longer listed China as a top 3 investment priority for American firms, that from the Chamber's annual position paper earlier this year.
But what's been the Chinese response to this?
A spokesperson for the Chinese embassy in Washington rebuffed those comments about being uninvestable, saying that there's 70,000 U.S. firms doing business in China and that most of them wanted to stay, also pointing out that 90% of those businesses were profitable. The spokesperson also said that Beijing is working to further ease market access for foreign companies. Chinese officials say the country is actively advancing its high-level opening up, and that embassy spokesperson said the country is making efforts to provide a, quote, world-class market-oriented business environment, adding that China is looking to open its doors even wider to the outside world. Now, I would note, too, that the president of the EU Chamber of Commerce has said that there needs to be, yes, less ambiguity in terms of policy and regulation in China, but that the chamber would not use the term uninvestable to describe the conditions in China.
Okay, so this recent crackdowns in China have really spooked global investors, I'm sure. But what have been the trends recently?
That's right. The numbers do not lie. The foreign net selling of $11.4 billion worth of Chinese stock this month, it's a record outflow. Corporate investment is also going missing, with foreign direct investment at its lowest since records began 25 years ago. But let's look at what's happened in recent days. China has tried to make a series of moves to restore investor confidence. That includes cutting a tax on stock trading for the first time since 2008. That levy was reduced from 0.3% to 0.1%, and that move immediately triggered a 9.3% surge in the Shanghai Composite Index, marking the second biggest daily gain on record. But much of the gains did evaporate since the boost, with investors returning to concerns about the Chinese real estate market and sluggish growth prospects. Now, broadening out our look at the market so far today, though, Asian investors were tracking a rally on Wall Street after a softer than expected U.S. jobs report that's soothing fears that the Federal Reserve will hike interest rates again soon. Seemed like spirits were brightened in Shanghai and Hong Kong as well after a report that China's biggest state-backed banks would slash rates on mortgages. On today's opening in Europe, London's FTSE 100 index gained 0.4%, and the Frankfurt DAX edged up 0.1%, while the Paris CAC 40 rose 0.2%.
Thanks so much, Cassandra Sons, DW correspondent right there in Berlin. Thank you for sharing the developments right there. So next on the program, investments in clean energy expected to surpass fossil fuels. That conversation next. Do stay with us. This is Business Incorporated. Welcome back. Let's look at markets in the U.S. now. Stock futures fell slightly early on Wednesday after another positive session, marking the latest leg in an end-of-month rally as investors try to mitigate August losses. Futures tied to the Dow Jones Industrial Average fell 0.01%. S&P 500 futures and NASDAQ 100 futures slipped 0.09% and 0.14%. The moves followed a third consecutive winning session on Wall Street as investors made up some ground at the end of the month. Let's see how trading, however, ended yesterday with our correspondent, Maria Bird.
The U.S. stock market closed much higher on Tuesday as economic data shows signs of a labor market cooling. This has many believing that there could be a soft landing to the interest rate hike campaign. This will have many investors watching to see what will be next, as on Tuesday we saw closings for the Dow Jones up at 0.85%, The S&P 500 up at 1.45%, and the heavy tech NASDAQ up at 1.75%. This will have many investors waiting to see what will happen when there is additional data release of the jobs reports on Friday. This will give further signs as to whether or not we will see a soft landing to the interest rate hikes.
Thanks, Maria. And now more reactions now in Nigeria are pouring in over the federal government's declaration that Port Harcourt Refining Company Limited would be back on stream by December. The latest is from an energy expert and managing director of Kenyan International West Africa Limited, Dr. Victor Ekpenyong. Dr. Ekpenyong commends the Minister of State for Petroleum and his counterpart for gas, adding that the government must pay attention to issues of oil theft and vandalism in Nigeria Delta region. He also believes that Nigeria has the capacity to produce more. Let's take a listen to what he has to say.
The biggest issue in oil and gas sector has always been evacuation. And, Nigeria has a capacity to produce over 2 million barrels of oil per day. And because of the vandalism that is going on in Niger Delta, you discover that a lot of pipelines that's supposed to evacuate some of these produce hydrocarbon are being tampered with. So now Nigeria that's supposed to evacuate, the channels through which they're supposed to be evacuated are being suspended. So the idle assets are just there, the oil wells are just there, and you can't produce, if you produce, you're not going to be able to evacuate it. That is just a challenge. And this challenge is affecting the country in terms of foreign revenue. We're supposed to be earning revenue from oil, which is one of the major sector that is contributing to Nigeria economy. And because of that, Nigerians are suffering. You see the rate of inflation and everything that is going on in the country. It's just because we are not making enough revenue the way we used to make. So the solution to this problem is for all the stakeholders to come together. The government, the security, the community, and the operators come together and solve this problem once and for all.
Now, this sort of set the tone for the next conversation. We're looking at the latest report from the International Energy Agency, which indicates that the recovery from COVID-19 pandemic and the global energy crisis has led to a significant increase in clean energy investment. Between 2021 and 2023, investment in clean energy have risen by 24% compared to a 15% increase in fossil fuels. Now, in 2023, it's estimated that approximately $2.8 trillion will be invested in energy. Of this, over $1.7 trillion is allocated to clean energy. Chinan Dikwo, energy expert and vice chair, African Energy Council, joins us to unpack this. Chinan, good afternoon. According to the IEA reports, for every $1 spent on fossil fuels, $1.7 is now spent on clean energy. 5 years ago, this ratio was 1-to-1. What factors have contributed to this rapid increase in clean energy investment in such a short time? Can you tell us?
Thanks for having me, Will, and an absolutely important question here. So the clean energy wave has been happening for a while. It's not been very obvious for lots of people, but I think you go back to 2015, there was a massive increase in clean energy investments after the downturn, the oil downturn of 2014. And you're absolutely spot on. At the moment, for every dollar spent in fossil fuels, about 1.7 is being spent in clean energy. The reason for that is very simple. If you look at most of the clean energy technologies today, they've seen a rapid increase in their efficiencies, okay? You take solar, for instance, it's gone from about 12% efficiency to around 24 today. You look at cost of solar, it's been 90% down in the last 10 years. So 90% shave off of the cost in the last 10 years. Wind, about the same. You've seen also a massive learning curve, so costs have come down. So the whole point here, Will, is what's been driving it? What's driving it is that these clean energy technologies are reaching cost parity with fossil fuel technologies, and that's starting to become very attractive. That's why we're seeing a massive resurgence. Now, outside of that, of course, the thing people know so much is this clean energy agenda and all the noise around it. Yes, that's part of it, but the reality of it is, from a technology standpoint, these technologies are seeing a seismic shift. From a cost standpoint, they're becoming way cheaper. From an efficiency standpoint, they're becoming much, much, much better. So these are the things that have driven it, to answer your question pointedly.
So how is the policy, because I was looking at the report and it's saying that how has policy support such as U.S. Inflation Reduction Act influenced the trajectory of clean energy investments?
Great question again, Will. The reality is, so if you look at the US, yes, there is the Inflation Reduction Act. You're 100% right, but let's be very clear. The Inflation Reduction Act also has healthcare in there, so it also has mechanisms for healthcare, also has mechanisms for revenue generation, for tax breaks, and of course clean energy. I think the real winner here is actually the EU Green Deal. The US are moving in clean tech, correct? But they're not the leaders in there. They're more laggards in that space. They're still investing massively in fossil fuels. The real winners, the real people driving innovation, new technology in green investments is actually the EU. So you go back to the Green Deal, the EU Green Deal released in 2020. So they started with, the EU Green Deal. It gave massive tax breaks from a policy standpoint, put lots of, key levers that enable investors to come in and invest and R&D to happen. And that's led to a very, very positive outcome for clean energy.
So what are the implications of this? I'm just, trying to think about countries that depend on fossil fuels. What are the implications of this shift for countries such as Nigeria? We saw that report where you're saying Nigeria needs to start refining more. But what will happen if this shift keeps going on? What will happen to countries like Nigeria who rely on fossil fuel?
Absolutely. Thanks for that question. So this is the catch, and I think this is where Nigeria needs to listen very attentively, okay? You go back 10 years ago, you go back 5 years ago, fossil fuels in terms of their pricing, much lower, renewable energy cost, and, clean energy much higher. Today, we're seeing cost parity. So these are starting to reach cost parity together, okay? So from a cost standpoint, they're starting to compete. What that means ultimately is if you look at our markets in Europe and the US and parts of Asia, lots of these markets are moving away from fossil fuels into clean technology. What's an example? You look at electric vehicles. You go back to the UK today, there are laws that say by 2035, much of transportation will be electric. You go to Europe, exactly the same. So what that means for an oil supplier like Nigeria here is this, that if we're not careful, a lot of our oil supplies will end up being stranded. They'll go into international markets and there'll be no buyer for them because that whole segment of transportation has been electrified. And this is where our thinking hat needs to be on as a nation. Lots of the regulators need to start to think, what can we do? How do we start to diversify? How do we start to invest in clean tech? What needs to happen from a policy standpoint? There's a big risk that as an oil supplier, we might lose that position. And of course, there are alternatives. Hydrogen is really massive. The EU is a demand center. We can take advantage of that and start to ship hydrogen into Europe. We can take advantage of a renewable energy boom and increase the penetration of renewables in our energy mix. So there's several things that we can do, but I think we need to wear that policy and thinking hat.
Thank you so much. We do need to wear that thinking out. It's time to, put the right policies in place and implement them. Very important. Thank you so much, Chinan Dikwa, Vice Chair, African Energy Council, for sharing your thoughts and perspective on the program.
Thanks for having me.
Now we'll move over to Ghana, where Ghana has agreed to terms of swap of about $4 billion of domestic debt restructuring, taking another step towards meeting its obligations under the International Monetary Fund, IMF bailout. This came out yesterday, achieving about 95% success under the latest 3 debt exchange deals. According to the IMF, the Bank of Ghana's participation in the debt swap forms part of efforts to share some of the burden the domestic debt exchange program on the government debt holders, along with banks, other financial institutions, pension funds, and individuals. The BOG says it has had to take close to 50% of the haircuts, which culminated in a huge portion of the impairment loss of 60 billion Ghana cedis recorded in 2022's financial year. And that's it on Business Incorporated. Do join us tomorrow for another edition. I'm Will Ibong. Thanks for watching.